ask you to make your decision between buying a property in Lekki or with the same budget, buy a property in Mushin, what will be your decision? Before you make that decision, you need to be careful. It's easier to say, oh, I'm taking the flashy part of it. Lekki phase one obviously looks very flashy. It looks like the new kid on the block, and the Mushin is a bit mushy. But in deciding what property you want to buy, you need to understand exactly what your goal is. There are two ways you can make money in real estate, two main ways. The first one is capital appreciation. Capital appreciation means I buy this property for 100 naira. I sell it at the end of 1 year for 1,500. The property price has appreciated by 500 naira, and that is 50% capital appreciation. The second way that you can actually make money from real estate is the concept of rental return or rental yield. I buy the same property at 100 naira. I rent it out to Chinyere at 1 naira. And then that means for the 100 naira invested every year, I'm earning 1 naira. So my rental return per year is 1%. That is the second option. There are other routes that are a bit more technical. Like I know that the primary reason why I want to buy this property is as a store value. I buy the property for 100 naira. I rent it out to Chinyere, and then I take that same property to bank and I say, can I borrow 50 naira to do this particular transaction using this property as collateral? Those are some other ways. You also need to understand that there are factors that can affect the value of your investment. I'll just mention briefly before I go to the Mushin versus Lekki phase one conversation that we had. So one thing that could affect the value of your property is one, a direction of commerce. What I mean by direction of commerce is, if you find a location where businesses are moving to, let's take the free trade zone or the Lekki axis where a lot of businesses are moving to that particular location for now. You have the Dangote refinery, you have the free trade zone itself, you have the international airport, you have the Lekki deep sea port, you have a lot of industries coming into that cluster. So that is the direction of commerce. It might not be obvious now, but you can guarantee in the next 2 to 5, max 7 years, you will have significant value appreciation in these areas. So if capital appreciation is your direction, you might want to actually take a look at the direction of commerce and trade, look at the direction of government policy, look at the direction of government spending. And really, in all these three categories, that area would qualify for it for those of you that are interested in capital appreciation. So let's go back to the value of, Lekki versus Mushin. The first question you want to ask before you decide to say it's Lekki phase one or to say it's Mushin is, what exactly is the goal of investing in this particular asset? If you do not have a goal for any investment, you don't want to do it. You want to define clearly what exactly do you want to achieve, because at the end of the day, the success of your investment is what you got versus what you set out to get. And then you can say, I wanted to get 100 and I got 50, that's 50% success rate, something like that. If you want to decide then, and you say, look, my primary consideration is rental return. That is what I'm looking out for. So let's take a look at it. We're going to do a bit of mathematics here, and then we're going to try to look at the two scenarios, and you can make up your mind what you want to do. So let's say you want to buy a 4-bedroom, fully detached or semi-detached duplex in Lekki phase one today. You probably will spend between 400 to 500 million. In some instances, actually a bit more than that. So let's say you spend 450 million to buy that. You buy the duplex, and then the same budget that you expended. Let's say you want to say, you know what? I would rather prefer to go to Mushin. Now, if you go to Mushin today, you can find tenement buildings, or this face me and face a room and parlor facing each other. Maybe 10 here, 10 here facing each other. Ground plus 2, ground 1, 2. So that means 20 on this floor, 20 on the middle floor, 20 on the last floor. You probably would get it around 200 to 225. So you will be able to buy 2 blocks of tenement building. So making it about 120 units of 1 bedroom, a room and parlor. That's less than even call it 1 bedroom, a room and parlor. So you bought 2, meaning you have 120 units of 1 bedroom. So let's look at what the renter is. How much do you think you're going to rent out your 4-bedroom or 5-bedroom duplex in Lekki phase one? The average rental yield or return generally in Lagos, even across Nigeria, but Lagos particularly, is between 3 to 5%. And I'm not talking about optimized rental. We'll probably cover the concept of optimized rental in one of the sessions we're going to have. Optimized rental would include those that are using as short-let, those who are using as special needs, those who are using a service office, and so on and so forth, right? So you want to actually say, how much of that? What is 5% of this amount? But let's even double it. So on your 450 million fully detached duplex, you probably would at best earn between 20 to, let's push it a bit, 30 million. So let's pick the upper figure, 30 million naira per annum. 30 million naira per annum, that is what you earn from your fully detached duplex in Lekki Phase 1. So if you were to go, you have 120 units of one-bedroom apartment. How much would you charge for your one-bedroom apartment in Mushin? You probably would charge 500,000 naira per annum, and then multiply by 120. That will give you about 60 million. Now, if you look at it from the face value, that significantly would be double what you would get best case scenario in Lekki Phase 1. So if you're looking like, my primary consideration is I want significant cash flow from my rent, then what it means is that for, naira for naira, it might pay to actually go for tenement building, renovate them, and then lease them out. So that might be the consideration that you will use. Now, am I saying now leave your property in Lekki Phase 1 or buy, and go to Mushin? That's not what I'm saying. What I'm saying is you need to first of all define what the consideration is, what the primary goal of this transaction is. And you're saying that I want rental income. That is my primary consideration. Then 2 tenement building with 120 units of one-bedroom apartment as a room and parlor might be your best plug. So that is that. But if you're looking at capital appreciation, you want to ask which one of this property is likely to actually provide a bit more in terms of appreciation. Lekki is an emerging, it's established, but it's not as matured as Mushin. Mushin 8 days has been in the past. So if you're looking at one that is, still has potential, you actually would take Lekki Phase 1, because really, if you look at the property price, but come to think of it, in terms of actual action on ground, Mushin 2 has significantly demonstrated some resilience and has appreciated in line, particularly because of this devaluation and inflation that is happening. But if you look at the rate of change, you probably will look at where the newer environment, the emerging environment, provide a bit more capital appreciation. So if capital appreciation was your goal, Lekki Phase 1 might be a bit better. But overall, naira for naira, for the same budget, you probably will get it on the short term, better rental return on your money. Let me just extrapolate a bit back. When I talk about capital appreciation, in talking about capital appreciation, I said go for the emerging area. They provide the best of capital appreciation. If you look at data, has proven that those axes that are emerging in Lekki axis, if you come to this side of to the mainland side of Lagos, you probably find more appreciation going towards OP, Arepo, Mowe, before you have in the more matured residential neighborhoods or commercial neighborhood, whichever one you might be taking a look at. So let's come back to the question, which one would you pick? But before you make that decision, you also may want to consult with your investment advisor. If you have any question, I'd like you to drop it in the comment section. I will take them during the next episode. I hope this has been of value to you. If it's been of value to you, I'd like you to do me a favor. I have a team behind this shoot, and part of what they've asked me to do is to make sure that I gain followership. That's the only way I can pay back for their time. So please just follow us on our Facebook page at CASAFINA Development, and then that's the same username, right, for Instagram, and then CASAFINA TV on YouTube. Thank you so much for your time. See you at the next episode.